All right. Well, good morning, apes, and happy Wednesday morning. Yes, it is still morning over here in the east coast of the United States. Over here, we are coming at you live from the Daily PL Global headquarters. It is Wednesday, December 13th, 11:44 a.m. Markets are off to a relatively mixed start, but still pretty good. Mostly trending upwards here today. We got a lot of news yesterday that things are trading on. We're leading up into that FOMC meeting here later on this afternoon. That's just about 2 hours away. So markets are a little bit trepidatious going into that. It's usual to not see a whole lot of action in the morning leading up to an event like that, even though this isn't quite the Super Bowl meeting that a lot of the last ones over the past couple of years have been, because there is literally 100% odds, according to market-weighted probabilities, of the Fed holding interest rates here. Definitely feel free to go make some bets on Calcio and Polymarket if you think that's going to disagree. They definitely give you some great odds, but we get a lot to talk about today, so let's go ahead and get right into it. Thank you all for joining us as usual here. What we're talking about today. So, of course, we got the CPI report yesterday. We got the real earnings report as well, which we didn't talk about in the written edition, but we're going to talk about it a little bit here today on the live stream. Then we're going to go ahead and move into some of our big movers of the day. We got CAVA going, not because of anything good, but just because of some financial trickery going. Well, not trickery, financial engineering, let's call it. You know what? Let's be nice for today. We had Zillow had a relatively good day. Oracle and Lucid, far from the same thing, but then we go down below and we see that there's a lot of action going on in the AI funding market, whether it's for the companies themselves, for the employees of these companies. A lot of action going around. It's artificial intelligence, so you know there's going to be a lot of dollars involved. Let's go ahead and see how markets did overall for the day. Now, it wasn't a terrible day. It definitely wasn't anything to write home about. The Russell 2K took a sudden dive towards the end of the day that, not necessarily a dive, I mean, they finished down 10 basis points. It was essentially flat. While the other indexes were moving higher for the day, we had a switcheroo from the day prior where we saw a lot of underlying breadth where, large cap, mega cap stocks really sold off. Yesterday was the complete opposite. It was back to what we've kind of seen throughout 2023 with the major or mega caps leading the way. As a result, the WSO Alpha portfolio did manage to rise, and it's astonishing 43 basis points for that team. I think all the choice words that you guys sent me to go ahead and pass over to them really encouraged them to start doing a little bit better. Treasury yields responded to the CPI report exactly as expected, pushing higher just a little bit, and likely because of that core CPI rating, that stayed flat at roughly 4%. So that might mean that J-Pow and the rest of the gang are going to come out a little bit more hawkish here today. We'll see exactly what's going on. We got a slight raise, but the best part of the day was easily the 10-year settling around 4.20%. Elon Musk's favorite number probably should be your favorite number too, because he's the richest guy on earth, so clearly he knows better than you, obviously, right? That's how that works. Let's go into some banana bits that we didn't want to talk about too much in the report. Wanted to put on your calendar here. Of course, the FOMC meeting. This little rundown from, I believe it was CNBC, is going to get you ready for that meeting. You still got 2 hours to prepare, so get your portfolios all set. And then, of course, the big red streaming giant, of course, being Netflix, is actually making a decision that we've all been waiting for quite a long time. They're going to start releasing some viewing statistics on all of their shows, so you can know how cool and unique and edgy you are by watching all of those interesting shows that you show your friends. Viewing statistics are going to be published for almost every title going forward, so keep an eye on that. That's going to be pretty interesting to see. Then, of course, Apple is upgrading their security features. The company is known for security, and it's kind of amazing that they didn't have this feature beforehand, but they're adding a stolen iPhone feature. That's going to be great for people like me who are noted phone and wallet losers, particularly in Ubers on the way home Friday, Saturday night, or should I say Sunday morning. You guys know what I mean. I just hope you don't lose things quite as often as I do. Now, speaking of losing things, we did not miss a step in terms of the disinflation going on here. It is absolutely time for Jerome Powell to come out with a diss track and start, just absolutely roasting inflation. I mean, I think he can take after the likes of Eminem, 50 Cent, Eazy-E, and a whole bunch of others to drop the most disrespectful track of all time on the process of disinflation. Speaking of the process of disinflation, we can go ahead and take a look at the report here. Let's go ahead and see what's actually going on. Let me scroll up to the top here real quick. So consumer price index for all consumers increased 0.1% in November. That translated to about 3.1% growth for the entire year. As we can see, that's a slight uptick from the October reading, but definitely still moving in the right direction compared to months prior. If we go ahead and look at the annual readings over here, we can see a very slight drop down. This blue line is the all items headlining index. We can see a very slight drop down from the 3.2% in October to 3.1%. Definitely still disinflating, but at a bit of a slower rate here. Whereas if we go ahead and look at the core CPI reading, which is the one that the Federal Reserve actually cares about, that one stayed flat for the month. So that's why there might have been a little bit of jitters over in the bond market here. We can see, like we said yesterday, they're just as schizophrenic as the stock market, even though we do call them the quote-unquote smart money. I don't know. The way that I invest, there's certainly nothing smart about it, but I guess for some people, that's how it goes. So this annual figure came in line exactly with what economists were expecting. Wasn't much of a surprise here, basically a continuation of the disinflationary process, but at a slower rate. So that at a slower rate is going to be the key thing going into today's FOMC meeting and then the subsequent FOMC meetings at the start of next year. Everybody's kind of anticipating a cut in March, May, somewhere around that time period. However, if we're seeing a disinflationary process slow down this much, don't be surprised to hear the Federal Reserve come out and be shitting their pants and saying things like, oh, we don't know if it's going to continue. We don't know what's going to happen, because that's exactly what we're seeing here is a flattening of the line. Who knows if that's going to continue into next year? After this month, we'll see the official inflation rate for 2023, so definitely stay tuned for that. But another cool thing that the Fed released at the same time was the real earnings report for November. So this is showing inflation-adjusted earnings and kind of the growth of that for the month. So as we can see, real average hourly earnings did increase in November by a huge 0.2%. I mean, that's just incredible. We might actually be able to afford homes someday with growth like that. But if we go ahead and take a look, we can see that this is a repetition of the same growth rate that we got in November. Slight upticks from September and August, but it's definitely looking good on that front. So as long as real average hourly earnings are outpacing inflation, or average hourly earnings are outpacing inflation, meaning we're getting growth in real average hourly earnings, we can likely be a little bit relaxed going into next year, as that will kind of keep up consumer spending. That's really going to be the main thing, especially with the growth in these credit card debt balances and everything like that. That's really been the big fear. But like we've been saying the whole time, it's really tough to have a recession when when unemployment is below 4%, as it has been for several months now, several years even. We're still chilling around that lowest rate. It's been the longest streak of being below 4% since about the 1960s as well. So that's been keeping the consumer afloat. Everybody knows that the consumer makes up about 65 to 70% of the U.S. economy in any given year. So as long as they're doing all right, we're probably doing all right too. Let's just hope that actually holds true and we continue to see this disinflationary process going forward. Stay tuned for the Federal Reserve meeting later today. Hopefully we see J-Powell drop the F word again, because that was one of the funniest things I've ever seen in my entire life. But definitely stay tuned for that. You're also going to want to stay tuned for some CAVA shares, especially if they're in your portfolio. Yesterday, the stock added almost 1/5 of its entire market cap, based on some financial engineering that was going on. Basically, there's a lockup period for most IPOs when they go public, where they essentially tell early investors, hey, you can't scam the public by just dumping shares into the market. That's exactly what people like Chamath do with SPACs, and why everybody hates SPACs so much, because you don't really need that lockup period for. That's just one of the key differences. Of course, there's a lot going on there, but scumbags like Chamath like to take advantage of that kind of stuff. So definitely be on the lookout here. So basically what happened was that lockup period expired. Bunch of other shares entered the market. We saw 10x the normal trading volume on the day. However, shares still went up, and by quite a bit, showing that there was a hell of a lot more buyers for this than there were sellers, which means that investor demand for CAVA shares is definitely pretty high. It's being billed as the next Chipotle. Who knows if that's actually going to work out? I mean, Chipotle is kind of a one-of-a-kind thing, especially if you ask my little brother, who is one of the best chicken chefs of all time. He does work at Chipotle. Gets me free food all the time. It's pretty sweet. Anyway, we can go ahead and move on down to Zillow, because wasn't really much news going on with CAVA besides the end of that lockup period. Definitely a good time for existing shareholders, though. It's going down to Zillow Group. Again, no major news here, but middle market investment bank JMP Securities is definitely getting a little bit higher on Zillow. Stock was up 3.75% to $47.26, because basically what they're saying is, yes, the housing market is complete trash right now, but it won't be forever, and Zillow stands to benefit the most from that. Gotta say, certainly sounds like it makes sense. I mean, why not? Hopefully the team over at WSO Alpha is paying attention here. It's a little wink to anybody that's subscribed to that. Be on the lookout going forward. Let's go down to what's rotten. Oracle, absolutely disgusting day. They're named after this concept of a person who can see into the future. The Greeks and the Romans, they absolutely loved oracles. Especially people like Odysseus and a lot of other people in those stories that you probably slept through in high school English class. But either way, it was definitely not a good day for the company. They came out with their earnings report for Q3, and they made the big mistake of 2023. Revenue missed estimates. Earnings did beat just barely by about 2 cents a share, clocking in at $1.34 instead of $1.32 as expected. But we did see sales come in at only $12.94 billion instead of the $13.05 billion that was expected. Not a huge miss. Definitely, we've seen a whole lot worse out there, but because it was a miss itself, that's definitely a huge red flag to the market, especially in a time period when demand is kind of that main concern rather than cost cutting. Companies have demonstrated their ability to be able to cut costs and kind of maintain their margin in this inflationary period. So what investors, have been more worried about is that consistent demand going into the holiday season, especially. Now, Oracle doesn't really care about the holiday season because they're a B2B enterprise. However, most enterprises are reducing their spend when it comes to other companies. So definitely wasn't a great sign to see that continue here. Let's go ahead on down to our other rotten ass stock of the day. That, of course, is Lucid Group. I mean, this thing is just a piece of shit. It fell about 8.5% yesterday. Essentially, what happened was kind of one of the worst things that can happen to a stock. The CFO just up and dipped out of there. I mean, Sherry House was the name of the CFO. She just kind of got up and left. Didn't really give too much of an explanation, but she did resign. So I believe it was the head of accounting or something like that is coming in. But I think we have a feeling of why she might have dipped out of there. So as we can see, down about 0.5% here today. Let's expand out to a year. Oh, it's down 50%, and that sucks. And then we look at the all-time or the 5 years. Let's just go ahead to the max. We can see that this is some absolute garbage. So the stock is down well over 50% all time. Let's go ahead and take a look here. Yeah, down about 57%. You guys can see that things are just not going well. They haven't been going well since late 2022 when all of a sudden everybody decided that nobody wanted to get credit anymore for these large kind of durable good purchases. And that's what we're seeing. The mini Tesla is not doing so hot. Now, Tesla was able to survive through something like the GFC. Maybe Lucid can survive through this demand crisis, but who knows? Place your bets now because you're going to want to get in early. Moving on down below to some AI stuff going on here today. There's a lot of action going on in the AI space. We don't have any videos here today from our producer team, but because we have such an extensive and expert network of producers carrying us through the Daily Peel Global headquarters every day, what we do have for you guys is a little bit of a demo on these different AI models. So we recently, and when I say recently, I mean in the last 24 hours, got access to Grok. So that is going to be the X.AI bot. That's the one that we have right now. I'm sure there's going to be more iterations. I don't know why it's named Grok, but it's allegedly based on like the Hitchhiker's Guide to the Galaxy or some other book that Elon Musk absolutely fanboys over. So that was pretty cool to see. But let's do a little bit of a test run on exactly how these things respond to questions. So let's go ahead and what's something that we could ask you? Let's say, now, ChatGPT is updated to about April 2023, so it should be able to answer this. Give me a summary of the stock market in 2022. Let's see what it says. Experienced significant fluctuations characterized by several key factors, blah, 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 blah. So everybody can see what's going on here. While that's giving its response, let's go ahead over to Grok and ask the exact same question. Now, Grok is updated in real time, and you can also see this little button up here, change it from fun mode to regular mode. So let's go ahead and try both of them out. Let's start on, let's start on regular mode so we can build up to that. But give me a summary of the stock market in 2022. Let's see what Grok has for us. All right, Grok is taking its sweet time compared to ChatGPT, likely because it's using some real data, even though this isn't real time at all. Stock market experienced a challenging year with all three major averages posting negative returns. I like that it's giving me it in kind of more paragraph format. This is a pretty clean performance, but it's a bit of an eyesore as well. So ChatGPT definitely holds up well, gave us a good summary. Only thing is when I ask it, what is the, yeah, there we go. What is the stock market doing today? Then it will probably, oh, actually, it looks like it's going to search with Bing here. This must be new from GPT-4. You guys know that I am an absolute idiot when it comes to technology, so don't be surprised that I wasn't aware. Today, including the NASDAQ, are continuing their upward trend, fueled by retail investors buying over $7 billion of stocks in the past 5 trading days. Didn't know that was going on, but that's pretty cool. So ChatGPT, it looks like it's doing a pretty good job summarizing what's going on in markets today. Let's go ahead back over to Grok. Grok gave us quite a bit here. Linked to a couple of stories even. I mean, that's pretty impressive stuff. Quite a few stories. And the best part is a couple of other tweets as well. Like this guy, Evan, giving a summary of the NASDAQ 100. We got Josh giving us the full rundown of the performance. But let's ask it, what is happening in the stock market today? Let's go ahead and run that. And it looks like it's going to give us a response. While we're waiting for that to load up, let's go ahead and ask the exact same question, but in fun mode so that we can have a little bit of fun with that. So the stock market today are mixed, blah, 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 blah. All right, so it's given us a pretty good response. Let's go ahead and switch links over to fun mode and ask the exact same question. Pretty sure I got to wait for this thing to stop responding, so that'll likely just be a minute. Let's go back and check on ChatGPT. Yeah, it gave us a pretty good summary. Global markets, particularly the Chinese stock market, are experiencing some challenges. That's definitely true from the futures action that we were seeing earlier this morning. But let's go ahead and see how Grok is doing. Grok will not shut up. It is giving us quite a lot more than ChatGPT. But let's go ahead and ask it now that we're in fun mode. Hopefully it gives us something sassy. Elon said that it answers pretty spicy questions there too. We're definitely not going to do that on this live stream, but that's something fun that you guys can definitely go ahead and check out behind the scenes. We're not trying to get canceled just yet, although I'm sure if Wall Street Oasis and Patrick keep me around for long enough, we certainly will get canceled at some point. But hey, we're going strong for now, so let's keep that up. Stock market is a mixed bag of nuts. I mean, I'm laughing my ass off. That is absolutely hysterical. Investors are eagerly waiting for the Fed's interest rate, blah, 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 blah. Yeah, it looks like it's given us a little bit of attitude in here. The stock market today is like a box of chocolates. You never know what you're going to get. Interesting to quote Forrest Gump when talking about the stock market. But that's just a little bit of a rundown of the differences in these two models that we're seeing. Looks like they're pretty on par, but according to a lot of experts, Microsoft and OpenAI with GPT-4 are kind of only on par with Google and their new Gemini model. Nobody's really seen Gemini acting in kind of a straight and normal way, besides that pre-recorded video, unless you're a super technologist and you have access to that beta test. We got access to Grok finally here, by the way. Like I said, this is kind of our first day, so we're still technically in that beta test mode, but it's a really cool thing to see. So what's going on with these companies? First of all, let's start with X.AI. X did file to raise $1 billion somewhat recently. We talked about that a little bit. I believe it was a banana bit. That the richest person on the planet is asking for $1 billion. Just go ahead and lend him a few. Let's go ahead and see. This is what we call the SEC Form D. This is how private placement offerings raise capital. We can go ahead and see pretty much the amount that was meant to be sold as well as the amount that's yet to be sold here. So we can go ahead and check in on exactly what's going on. Yeah, as we see here, the total offering amount is $1 billion. Total sold, it's about 135 million, so 865 million remaining there. Definitely go ahead and try to get in if you are an accredited investor. You got to be limited to like 35 accredited investors that can get in. It's a whole lot of nonsense going on for the SEC Form D so that you can release the least amount of information about your company while still raising funds. That's basically what's going on there. They're looking to get about $1 billion. That's pretty much nothing compared to the $14 billion that OpenAI has raised from pretty much just Microsoft alone over the years. But hey, it's Elon. It's a lot of other huge AI nerds that are apparently really smart and celebrated in the space. Don't really know about that. But speaking about huge AI nerds, Sam Altman is pushing forward with the tender offer for his employees over at OpenAI. It's given them an $86 billion pie to grab a slice of. Basically, what this means is OpenAI shareholders or employees that are paid in equity are being given the option to essentially sell their shares. It's not like an open market transaction or anything. There's a whole lot of rules going around it, but it's getting a valuation of $86 billion. This is despite the company allegedly making only about $45,000 in revenue last year. That was the story that I saw this morning, so we didn't get a real chance to incorporate that. But allegedly, it was pretty much all from interest income. That was in 2022, however, so it'll be really interesting to see that revenue report come out this year. We'll see if we can actually see anything, because another thing that was pointed out was OpenAI, despite being a nonprofit, publishes about as little information as it possibly can as it relates to its financials and other ongoings within the space. We would love to see some data from 2023. I'm sure we're not going to get it, but we'd love to see something like that going forward. Allegedly, there's no real purpose for the company being a nonprofit if they're not going to give us that information, if they're just going to act as this black box like they have been the entire time. That's at least according to Professor Thad Calabrese at NYU. Great name, by the way, Thad. I mean, it just makes you think of Blue Mountain State and all the funny moments on that amazing show. Big question of the day: how is the AI war going to shake out? Is ChatGPT the next Google? Can it actually unseat the king of search traffic? And when will we get more transparency in OpenAI's ownership structure? Are they really a nonprofit? Doesn't really seem like it to me, but hey, that's for you to decide on your own. Let's go ahead and take a look at what the wise investors say today. Mr. Cornelius Vanderbilt, he's one of the richest people in American history. Go ahead up to Newport, Rhode Island if you want to see his crib. He's got a bunch of Vanderbilt mansions up there, and they're really cool to see. So if you're in the area, definitely go ahead and check that out. But what did he say? He said, I don't care half so much about making money as I do about making my point and coming out ahead. We couldn't agree more, Cornelius. It's about being right. Who cares about how much money you make? I'd rather go broke being right than get rich being wrong. So that's our lesson of the day. Thank you to Cornelius for that going forward. And thank you guys very much for joining us in here today. We definitely, appreciate all the comments and everything else going on. I'm going to try to start responding to some of these comments on the live, but like I said, you guys know that I'm a moron when it comes to technology. We're trying our best over here, but either way, thank you so much for joining us here today. I do see Mr. Ian C saying all of my homies hate Chamath. Couldn't agree more, Mr. Ian, and thank you for being on the same page with us there. We love to see that kind of support, but either way, thank you guys very much, and we will see you tomorrow. Happy trading. Get ready for the FOMC meeting. Bye now.